Operating leverage is used to measure and explain the gains and earnings of a business. It's usually associated with the effect that is created in a business as a result of their fixed costs. These fixed costs cause a leverage effect on earnings before interest and taxes, since a variation in the sales produces an overly proportional variation in income. Another way to think about this is that the operating leverage is the relationship between fixed costs and variable costs, when taking into account the relationship between the price and the variable cost, which is called the gross contribution margin, which is equal to price minus total variable costs. When fixed costs are high and variable costs are relatively low, a business is said to have high operating leverage and is considered riskier, since they still have to pay off their large fixed costs, such as interest on debts or rent. Conversely, when a company has lower fixed costs and relatively higher variable costs, the company is said to have lower operating leverage and is considered less risky, because variable costs are related to revenue, and when there's a drop in revenue, for example, the company can still cover its fixed costs because they're lower. So why are these statements true? So let's imagine a business that is going to open. To do this, it needs to assume the costs of buying machinery, office furniture, buildings, rent, etc. These are what we call the structural costs and form part of the total fixed costs. There are also the variable costs, which can be the acquisition of materials, resources, services, paying of salaries, etc. So once a business is running and earning, there will be a moment in which the fixed costs are covered or are paid. This moment is called the break-even point, which means that if there's an increase in sales, this will lead to an increase in a greater proportion in earnings, or the operating leverage effect. This also should be noted that at higher levels of fixed costs, it will take a company longer to reach this break-even point.